There it is.
There it is.
Yes.
Here we are.
We are.
Okay, we got a minute to spare, so welcome everybody. Come on in, and we're just going to get set up here, and let's see how we do. Let me be sure that this. I'm going to try to be sure my volume's off. There we go. Fantastic. Now we don't have to listen to us talk.
Yeah.
And we have some people joining us. Welcome, welcome, welcome. Okay, let's see. All righty. Okay, we're going to give it just a minute or two here because it's 4 o'clock straight up. But I thank everybody for being prompt and joining us. And, you know, number one, I want to thank everybody for really just rolling with us on Friday or Thursday, because that wasn't good. Little computer boo-boo on this end, and I think I fixed it. We're here. So
you made it.
Yep, we're here. So that's really good. And I really appreciate you guys all coming back on Monday. And we know that there's a lot going on in the world. So, you know, take a deep breath and zen with us and learn a little bit about the transaction rescue. So, you know, I got to give you a little lead in as to why we kind of had that emergency unplugged. Because I was in the Ladera Ranch marketing meeting for Orange County Realtors. I know a lot of you guys are from different associations, different parts around the state. And Dave Marzinke did a really, really good presentation. Something that I have, you know, you get little bits and pieces here and there as a realtor. You know, you're just like, okay, well, you know, if the loan officer ghosts you, that's not a good sign. Or when it's like, well, you know, we just can't quite remove that contingency removal, you know, and there's all kinds of red flags going up before that. And sometimes you just need a little bit of a guide. And Dave did the best presentation. So, you know, there's really two cool things about this. One, you're going to learn a heck of a lot from Dave Marzinke, who I personally think is really just a treasure trove of education. I can say that. He's got some, you know, everything that I've ever heard from Dave has always been something that I can use. Today, I hope you're going to find something that you can use. The other really wonderful thing is after this introduction, you're not going to hear from me. It's going to basically be Dave, but we're going to have a Q&A session. Feel free to put your comments in. I'm monitoring them on Facebook. We'll have a good, you know, back and forth here, but I just wanted to kind of lay down the groundwork here and let you know that we are so lucky that we have Dave from Movement Mortgage here to share with us. And now, Dave.
All right, thank you. Thanks for that introduction, Lisa. So I'm going to put on the screen share here and then we'll get started.
Okay.
Do this right. Okay, everything good?
Everything, let's see, it's going to take a little lag time for us to see it over there on Facebook, but it shall be here in just a second. So go ahead.
So the reason why I put this together is, you know, in the marketplace, we're seeing a lot of fallout of deals falling out of escrow just because of the credit that's tightened over the last, 90 days due to COVID and the secondary market with mortgages and everything that's been going on with that. So there's been guideline changes, and I don't think, all the mortgage professionals out there have stayed on top of that, or they don't realize some of the little things that can throw a transaction out of kilter. So what I wanted to do is just share with the information about what's changed, and then also think of us as, transaction first responders. We get a lot of phone calls. My team and I get a lot of calls when deals are going sideways or not, things aren't going as planned, or things don't sound right. And so we can just, first of all, be a second set of eyes. And then, second, we can come in, and if need be, we can, come in and rescue the transaction. With us in our underwriting system at Movement Mortgage, we can underwrite these loans very quickly, close them very quickly, and you're not extending out another 30 days for a transaction. We've closed deals in 8 days recently with FHA loans. And so it's just a way to, save a transaction and in the end, make the buyer and seller happy, because that's the goal. So that's where we're starting. That's the basis that we're using to start this conversation. So if you're reading this, chances are you might be in need of a loan rescue. And these are just some of the things that you want to take a look at as far as indications that your loan transaction or your escrow might be going sideways. And like Lisa indicated, one, no response from the loan officer, the processor, or anything like that. You know, if they ghost you, you know, that's a huge red flag. Two, a lack of urgency. If things aren't, you know, on top of it and they're not pushing the file through, that could be a sign that you might need to take a look at it. Constantly switching programs, saying we need to restructure it or we need to go to this program now. That's definitely a sign that you want to look out for. And then if the loan officer or the processor is requesting items over and over that you've already provided, you know, that's definitely a sign that your transaction's off kilter. So things you just want to be aware of, and don't wait till the end, right? Always ask those questions up front, because, you know, a mortgage professional should know within the first 2 weeks of the transaction if everything's buttoned up and ready to go. So if you're in week 2 or week 3 of a transaction and you're not getting answers or any of these signs start showing up, you definitely want to make sure that you make the switch as fast as possible, or at least address those items. So these are some of the questions that you can ask to diagnose if there's a problem up front with your transaction. And one, just ask the buyer, do they know what funds are needed to close the transaction and what their payment's going to look like? You'd be surprised how many times that people go into a transaction and they're not sure about that. And that's something that they need to know up front, you know, as they're making the offer, not, you know, halfway through the transaction. So they want that information up front. 2, has your lender reviewed or asked for all of your income, documentation, assets? You know, have they asked for that up front so that they can structure the loan properly and make sure they submit it to underwriting the correct way to minimize the amount of conditions? 3, have you received your loan estimate with your rate locked right away? You'd be surprised too if people don't get their loan estimate out, and they could be a week into escrow and not even see that yet. And so that's something that you have to ask for. And 4, has your lender gone over your property taxes and HOAs for this specific property? Especially on condos, we see this a lot on fallout where they'll enter into contract. And if they're buying in an area that has Melrose and they're dealing with a lender that doesn't know the area very well, that's a huge shock. And they could be underwriting the file with the wrong property tax information. And if you're very tight on your debt to income ratio, that can throw a big wrench in things down the road. So they need to make sure that they have the correct information up front. And the HOAs too. I mean, you've got to make sure that those HOAs are dialed in. And then speaking of condos, you know, lenders need to be ordering those condo docs, the condo questionnaire, the certificate of insurance, all the financials that they need. You know, that should be ordered within the first 3 days of opening escrow. You know, they shouldn't be waiting a week, 2 weeks in the contract to order those documents. So you want to make sure that you've asked that question as well. Has the lender ordered all the condo docs?
I'm going to just
And then
ask a
5,
quick question. I'm going to interrupt. I promised I wasn't going to say anything, but I'm going to interrupt.
That's not you, Lisa.
I know, it's, yeah, you know, I have a certain reputation I have to keep up. As part of the standard, you know, monitoring your transactions, should we be asking the lender, processor, whomever, 3 days in? You guys ordered this, right? You got the request for the condo cert or whatever, because I think that that's something that agents don't really think about, that we're just like, oh, they got it all dialed in, we don't have to worry about it. Should we be asking every transaction? Has that been done?
Yeah, 100% you should be asking. So, I mean, the HOAs that or the property managers that we're dealing with, they can have a lead time of, you know, 5, 7, 15 days to return that package to the lender before they even have a chance to review it. So it has to be ordered right up front, because if you're going to remove loan contingencies, you know, in 17, 21 days, or even we see a lot of them accelerated now, you know, with shorter windows on the contingencies, you want to have those docs ordered right up front. And so definitely be asking that and putting that into your follow-up questions with the lender and with the processor.
Yeah, because that's one of those things that I think that a lot of us realtors, we take it for granted. We just assume everything's been ordered, but you only hear about it when it's like, I'm sorry, well, the condo cert hasn't come in yet, and we're going to have to wait for that. And you're just like, well, when did you order it?
Yeah.
Well, 2 days ago. And it's like, I'm sorry, we're, you know, 15 days in. So, you know, that's a little tidbit that, you know, some of us should be noting. And one other quick comment. Should we as realtors be checking with our buyer clients these same things that you're bringing up here? I think that a lot of us just assume that there's a good dialogue, but again, at what point in the transaction should we be asking? Maybe just a couple of days in, or?
Well, I think, with the first two questions, you probably should be asking those questions when you're writing the offer, to make sure, because if, the way I would handle it with my clients is I'm presenting them different loan scenarios up front before they even make an offer, because they want to know, I want them to know the numbers as they're writing the offer so they feel comfortable. And then the third question about the loan estimate, that should be handled within the first 3 days of the transaction. So, follow up with your buyers and say, hey, have you received your loan estimate? Is your rate locked? Have you gone over that? So,
good information. Thank you.
yeah, of course. And then the last question is, does your lender know how your income is structured? Do they know that, you own more than 25% of the company that you are the chief financial officer of? Do they know that you're on commission? Do they know that, you're on overtime or you have variable hours? Because that all plays a role into how the underwriter is going to underwrite that file. And so, that's something that should be handled within that first week of the transaction, or even more so during the pre-approval process. But, they don't be afraid to ask your buyer clients, does your lender even know how your income structured? And you don't have to get into the details as an agent, but just ask the question to make sure that they're thinking about that and they communicate that to the lender. Oops, hold on 1 second. There we go.
And while we're kind of transitioning, I had an interesting transaction a few years ago where my client was a flight attendant, and you're thinking, well, that's probably a straight up W-2 employee. It's a flight attendant. Turns out she received different bonuses because she spoke every language that she spoke. She got a bonus. She was the purser on the aircraft, so she got a bonus. She ran the galley on the aircraft, so she got a bonus. And she had been with that airline for over 25 years.
Yeah.
And the lender didn't know what to do with her income. And totally, we were held up for probably a week and a half while they tried to figure out, well, these are bonuses. And she's been doing this for 25 years, So even the jobs that you think are cut and dry can sometimes have some real idiosyncrasies to them.
100%, 100%. There's nothing that's cut and dry. You just have to get into it and find out what's going on right away. So some of the changes that that have been made over the last 3 months, to the different loan programs that could trip up a transaction is first off on government loans like FHA and VA. There's been a big tightening of guidelines for FICO score requirements on those. So a lot of lenders are requiring a 660 or higher credit score for FHA or VA. Some even up as high as 680. So, and then they've tightened up the debt to income ratio. So with FHA, you used to go to 56% on a total debt ratio, and they've cut that down to 50 or even 45 in some instances. Now, with our company, we're at a 620 for FHA loans. And if it's a VA that's active duty, we can still go down to 580. And then we don't have any overlays or extra guidelines on top of the FHA or VA guidelines. So that's definitely something to think about. For jumbo financing, the minimum down payment is 20%. You used to be able to do them down at 10% or even 15%. We're at 20% now, and minimum FICO is at 700. We used to be able to go down to 680 for jumbo. And then the debt ratio for self-employed is now a max of 35%. So, and they're going to want to see profit and loss statements on jumbo loans now, for the current last 3 months. The bank statement loans are non-QM loans. They still exist. They didn't go away completely. They just tightened up the guidelines. So that now requires a 25% down payment and a 680 FICO score. And they're going to need an audited or CPA generated profit and loss for those for the current year. And then verification of employment. This is a big one that's causing delays, especially because people working out of their home are trying to get a hold of people in HR departments. Verification of employment at closing. So we're required to do a verification within 48 hours of the close date, of the funding date. That's a verbal verification. It doesn't have to be written. So keep that in mind as well. And then the big one, forbearance, that's been the hot topic over the last few months. And before last week, Fannie and Freddie required that borrower who, if they went into forbearance on a loan, they had to bring that loan current, and then they had to have 12 months of on-time payments before they could qualify again for either refinancing or purchase loan for Fannie or Freddie conventional financing. Now they've changed that so that they bring that loan current, they only have to make 3 on-time payments for after forbearance, so that they've loosened up the guidelines on that, which is helpful, I think. And then second mortgages are options, the 80-10 rule, those are still options out there, but they've raised the minimum credit score. Well, now one of our vendors has gone all the way up to 750 for California instead of 720, but we still have one that's at 680 that we can use, and we can do an 80-10 financing. So those are just some of the different changes to the programs out there.
And something else that a lot of us need to be aware of is, depending on who the lender is, they're going to have different overlays, correct?
Yeah,
and so if somebody tells you, I'm sorry, we can't do this, they can't get a loan, go shopping. Call Dave. I get nothing from recommending Dave. Dave's just a good guy and he does a good job. But, people have their products and they have their overlays, and don't let that stop you from doing some shopping, especially during a transaction when you need to get that darn thing closed.
Yeah, 100%. And we rescued an FHA loan where the lender that was handling it was capping it at 45% debt ratio. And, I don't know many FHA buyers that are at 45% or lower on their debt to income ratio.
Or else they wouldn't be using FHA.
Exactly. So, yep. And then when in doubt, get a second opinion. Don't be shy about getting a second opinion on your financing for your buyer. I work with a lot of different partners, and I offer this to them and say, hey, let me take a look at the deal for you. And even if I don't do the transaction, I can at least give you some guidance on some of the red flags to look out for. And so have somebody, a local trusted professional who concentrates or focuses on purchase business, to be a second set of eyes for you. Because if you're a listing agent and you get 7 offers in, how do you know which one to help advise your clients on? Well, get a second set of eyes on those and just take a look at them. So, and then that's it. So that's the nutshell.
So when do you usually get a call?
We usually get a call when it's either about 5 to 7 days before closing.
Mm-hmm.
And contingencies aren't being removed, and they say something, well, we need this now, or we need this now, or something like that. That's usually when we get our phone starts ringing and people start asking about, well, can you guys even help us out? So.
Okay. Anybody have any questions out there? We got a quiet group today. I know I had fun a couple of weeks ago with somebody who just decided that they didn't like the interest rate that the lender quoted and disappeared. Completely disappeared. Paid for an inspection, never called their agent, never called the lender back, never bothered to return a call to escrow when it's like, excuse me, where's your deposit? We're 5 days in. They just literally disappeared.
Wow.
I mean, it's amazing some of the things that we're seeing right now, and we have so many opportunities for something to go wrong, I think that that's really kind of the scary spot. So, on the lending front, I know for a while, Dave, that it was really kind of tight, coming into the end of March and beginning of April. Have we seen anything loosen up since then on the lending?
Yeah, they have loosened up. Well, the forbearance, with guidance from Fannie and Freddie is a big example of that, where they've loosened up those guidelines. And we've seen some of the jumbo programs come back that went away for a while, and some of the bank statement programs come back that went away for a little bit. So we're starting to see
They're back, huh? I mean, I haven't really heard much about what's returned other than people aren't screaming quite as loud as they were.
Yeah. I know, well, just to give you an example, Angel Oak is a big investor in the non-QM space, and they shut down their operations. They suspended lending, and then they're back now where they're offering the, different products that they have. So, people are coming back into the marketplace.
Oh, okay. Yeah, because I think that is some good news. It's really not being communicated out there. I from a realtor standpoint, I think that when things were shutting down in March, the general public and the realtors didn't really know why, unless you were very savvy and plugged into what's going on in the financial markets, what was happening, why it was happening. It took me a long time to finally kind of figure out, oh, I thought it was this, I'm thinking, oh, refi boom, everybody's, hitting the lenders, and maybe there's truth to this, hitting the lenders with the, they're refining every 6 months because the rates have just gone down to nothing. And, that the lenders were getting a hit, the secondary market was getting a hit because it's like they never made their money. Was that a problem? And is that something that we're going to continue to see?
No, that was referencing to margin calls that the servicers were dealing with because of the fact that their portfolios were getting churned over so much, and they were, the investors that were buying this paper from the servicers, they were, calling margins due, and that was hitting them pretty hard, hitting the servicers, the secondary market pretty hard. That's settled down, and that's been stabilized with some of the actions that the Federal Reserve has done. It was really dicey there for a good 10 days. If you follow Barry Habib with MBS Highway, he has got his finger on the pulse of everything going on in the secondary market and mortgage-backed securities. And that's who I personally follow and get a lot of my information from. So if you want to check out a great source, check out Barry Habib with MBS Highway. And, that can give you a lot of good information there.
Yeah, he is a very good source of information. We do have a question. Finally, somebody asked a question, and from Sean. Sean wants to know, what are the jumbo rates? Can you kind of tell us where the jumbo rates are with it?
I always love that question.
Clients issues are.
I always love that question. What's your rate? There's a few factors that go into that, but jumbo rates that I've quoted are, between 3.5 and 3.875 right now. They are going to be higher than the conventional financing. Just because of the risk tolerance that's in the secondary market for those products. But that's generally where the jumbo rates are falling for most clients that we're locking.
Okay, good. And where are the conventionals at right now?
Yeah, a lot of conventional between, without paying any points, you're landing between 3.125% and 3.375%. Sometimes even lower than that, around 3%. And then we're even seeing them in the 2s if the buyer is willing to buy down the rate a little bit. So,
wow. And if we were going to be talking to an FHA client, because, I personally have seen a lot of first-time buyers coming into the market. What would I quote somebody just generally? If I was having one of those, possibly to happen open houses.
Back to the envelope conversation. So, yeah, I mean, FHA is going to be in the high 2s, the low 3s, depending on their scenario.
Wow.
FHA buyers, the lower FICO scores are still getting some adjustments to the rate because of the lower FICO scores. Even though we're going down to 620, there's some still hefty adjustments to the interest rate because of that for risk. But you're still seeing them in, the low 3s, even with a low FICO score.
Wow. How about VA? What's VA running? Pretty much the same?
Similar to FHA. I mean, VA is, phenomenal right now. We've even seen some.
And so I know they tightened up the credit scores, and I know you mentioned a little bit of it when you were talking on VA and FHA. The VA, it really bothers me that they're, tightening up requirements, because those have been historically the best performing loans in the market. And I just kind of take a little exception to that because, well, that's just me. Do you think they're going to reverse some of those? Are you seeing any sort of reversal now, making it, bringing the credit score back down, or? Oh my God, Dave froze. Okay.
Oh, there you go. I don't know if it's my internet or yours, but yeah. Yeah, no, that's frustrating because VA buyers get lumped in with FHA buyers, and they're two completely different sets of buyers. And like you said, Lisa, VA loan performance is the best out there. So, it's frustrating that that happens. But yeah, I think within the next 60-day window, I don't know for sure, but you don't know. But I think within the next 60 days, you're going to see some, loosening of the credit requirements for FHA and VA. I think just because people are going to get more comfortable, and it depends on how the economy recovers, and what we see with that. But I think we're starting to see some of the things go back to where they were. Not maybe not fully, but I think a little bit better than where they are now.
Yeah, that misconception just bothers me. I mean, that's been one of the things I've been railing on for years is, if you've got a VA client, not so much the agents that are representing them, because they're good. Listing agents, if somebody comes with a VA offer, at the end of the day, all of the money ends up in your seller's bank account. Doesn't matter, they're good. Do your part, help the veterans, let them buy a house. So I'll get off my soapbox right now.
Preach it. I love it. Keep preaching that.
Well, I think that there's really good opportunities for people to, understand. Yeah, it's a little bit more complicated when you're, having to come up with the offer. You've got, they say that there's no cost, or, that the veteran can't pay certain costs, and really the veteran can pay pretty close to anything. You can get, except for commissions, can't pay commissions.
Right.
But it can get all rolled into a credit. You pay a little higher interest rate, and I did that for the house that I'm sitting in right now. I paid $1,200 to get into a house, and I've already made well over $200,000 off of the $1,200 investment.
Yeah.
Using a VA loan, because my money's working for me better.
Yep.
So, if, as a listing agent, don't be scared. Don't be scared of VA loans. Don't be scared of veterans. They're good, good, good buyers. So,
Amen. Amen.
Thank you. And, you had mentioned that you were busy. What are you seeing out there in the field right now?
Well, Logan, Logan.
Of course.
Right? So he spoke in broker preview on Friday morning with Rancho Santa Margarita, and he referenced, purchase loan application for Southern California is higher now than it was this time last year. So just let that soak in for a second. Even though we've gone through COVID, purchase loan application to date is higher now than it was last year at this same point in time. And so we've, purchase loan, we've seen a V-shaped recovery. That's the only segment that we've really seen a V-shaped recovery, and it's coming back strong. And so we're seeing a lot of activity with pre-approvals. We're seeing a lot of new escrows being opened. So definitely think that the demand is out there. And if you follow Stephen Thomas, he's been talking about this now for the last 2 weeks, where demand is, definitely coming back in a V-shaped form. So it's as long as we don't have a glut of homes that just flood the market,
Yeah. Oh, and what's the profile of your average client? What are you seeing as your buyer profile right now that you're working on pre-approvals for?
Well, there's two segments. I'm seeing the first-time home buyers, like you talked about, and then we're also seeing the move-up buyers.
Oh, that's good news. I like that.
We've got 4 deals that we're putting together right now where the people are selling their home or just sold their home and they're moving up.
Wow. Did they share any reason why? I'm just curious. This kind of goes back to when we had Jessica Lautz on a few weeks ago with the demographics, and the jury was kind of out. Are people actually going to be buying up so they get more space for working from home, teaching from home? Anything you can share on that front?
Yeah, the ones that I'm dealing with, they're mostly people where they have growing families, and so they need more space for that. And I think when you're living at home and you've got some babies that and you're working from home and you've got babies that are running around as well, yeah, you probably want to have some more space where you can go hide away and do your work. So that can play into it. And I think
That's fantastic news. Yes.
and I think with, where interest rates are too, that's playing a huge role into it, because if, you bought a home at the end of 2018 and you paid, if you haven't refinanced that, you really need to talk to me, or another lender. But, the rates are so low right now that they can move up and still have the same standard of living. So.
That is true. I mean, it's amazing. And that's something that all the realtors on this should, pay attention to. Maybe it's time to do a check-in. I know I just refinanced in the nick of time using a VA Earl, or the equivalent of a Streamline. And my payments dropped $500 a month.
Yeah.
Going from a 3.75 to a 3.125.
Yeah.
And the rates went a little lower, then they bounced back up, and then they went up, and now they're back pretty close to that number. And that's $500 a month in my pocket.
Yeah.
And if I needed a bigger home, that's $500 more buying power.
Yeah. I mean, every $20,000 in loan amount is $100 on your payment, roughly. Right. So think about that. That's some significant amount of buying power with $500 a month.
Yeah. So all of us out there that have clients that we sold their first home when they were married, and now they've got kids and a dog, because we know everybody has quarantine dogs. They need a yard, or, they just need more space. Now's the time probably for a check-in,
Yeah.
to see if it's, talk to them about how much money they would save. Gosh dang it, there was one more question I had for you, and I've forgotten what it is. Anybody, questions out there? Lisa's running dry in the well here. What do you think we're going to be seeing in interest rates? Leaving Barry and Logan and Stephen out of the equation. What do you think?
What do I think compared to those
think?
guys? Come on. No, I think we'll see them stay relatively flat right now. I don't see anything changing with that. I mean, the Federal Reserve is doing everything they can to, pump the economy up. So, and part of that is suppressing interest rates. So you're going to see that maintain. It's all over the map, right? You hear, oh, we're going to be in the mid twos, by the end of the year for interest rates. I don't know if that's true or not. I don't see that coming, but I definitely think that we're not going to be higher than where we are now, just because of what's going on in the market.
On the correlations, like to the 10-year and everything's a little bit off. I mean, the things that I was told for watching the mortgage market when I was just a mere child in the real estate, when I could call myself a YPNer, and all of those things that I was told are now garbage. I mean, the market doesn't work like the market used to work.
No, the basic economic principles that we've all learned, those are not being followed right now, or those are not correlating, with what the stock market's doing and what the bond market's doing. So, we'll have to wait and see how that flushes out.
Exactly. Well, and we've got a remark from Sherry here saying, in demand for extra bedroom for multi-gen families with elderly whom we cannot really trust to care facilities too, which is a very good point.
Yeah.
And she said their Social Security payments count towards higher mortgage. I mean, how many family members can you lump on a loan before somebody starts questioning something?
Usually we're capped at 4, right?
Okay.
4 people on a loan application for a purchase. But if you have an elderly family member that, has great, credit and has Social Security income and they want to go on the loan, yeah, we can use that qualifying income.
Yeah. Are you seeing many multi-generational purchases where you're doing mortgage?
Not right now. No, I haven't.
I wonder if we're going to see that. Let us know if you see it, because I think that would be very interesting. That's the one thing that I'm kind of hoping comes out of this. I know, there's a lot of cultures where it's expected, and actually it's really a cool thing. And I hope that the rest of us would embrace that a little bit more and keep our family members maybe out of the nursing facilities, or just, the opportunity to have the grandchildren being raised with their grandparents is really such a cool thought. That hopefully that catches on a little bit more. And Sherry said, oh, go ahead. I'm sorry.
I said to say there's a lot to be said for that, having the wiser older generation around to help out.
Yeah, I'm not sure whether I'm, the mom and dad or grandma and grandpa yet. So, I'll take the older, wiser generation. So Sherry said, so hubby, wife, mom, and dad.
Yes.
Okay. What if you had hubby, wife, son, and grandma?
Yep.
Just as long as it's 4?
Yeah, as long as it's 4 or less.
Oh, I like what Sherry said. She says, it is in fact very cool. And the food. Yeah, there's something to be said about that.
Well, we're all expert cooks now, or we should be, right?
Oh, I'm very fortunate. I have a millennial in my guest room, and man, can he cook.
Phenomenal.
You can stay home as long as you want. It is all good for the food.
Love it.
Okie doke. So if anybody else has a question, throw it on now. Otherwise, we're going to wrap this up, make it a short edition since it's kind of the emergency Monday version of Nerdy Realtors Unplugged here. Dave, do you have any words of advice you could give a realtor out there right now regarding working with their clients and loans?
The biggest thing I would say is, like I said earlier in the presentation, don't be afraid to get a second opinion with, somebody that you trust, especially if your buyer is working with, a call center or outside lender. Not saying those are all bad. I'm not saying that, but I'm just saying that there's a lot to be said for somebody who works in the local market and that knows the transaction, that knows the areas, that knows all the ins and outs of the property taxes, the HOAs, all those different factors. So don't be afraid to get a second opinion early on in the transaction.
And it's always good to have an arsenal of lenders too. We're always supposed to, I don't know, Dave doesn't want to hear this, stick your fingers in your ear and go la 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 for a second. But we're not supposed to only just give out one name. Let your buyers make the choice of who it is that they want to work with. And Teresa says, what do you need for a second opinion?
Well, that's a great question, Teresa. So first of all, just have a conversation with the buyer, and second of all, take a look at their income and assets and what they're working with. So, but that's just a lot of that can be handled over the phone and have that good conversation to make sure they understand what they're actually getting into.
Now, this is kind of a weird follow-up on that. If you've already got somebody who has their app in, they're working with the lender, they're starting to get weird, you're starting to get worried, at what point is it okay to say, I want you to double app? Can you use somebody else's appraisal? Can you use, what can you use and what can't you use?
Yeah, so if it's an FHA loan, we can, or VA, that we can definitely have that appraisal transfer to us. That's part of it. Even on conventional loans, we can have the appraisal transferred. We're just in the middle of rescuing a transaction right now for a property down in Laguna Niguel, $1.2 million property, and we had the appraisal transferred over to us. It took a day to get done, so the other lender was very cooperative, which was good. Sometimes they can be, difficult because with that, with unconventional loans, it can be difficult to get the appraisal transfer, but we can use it. And so, I would definitely double app because you've got that backup plan, and the other lender is working on the transaction as well. And so they're not starting over, on day 25, if they're 10 days into the contract and things are not appearing as they should, double app it.
Okay. So kind of do that, like what's the pain point at which you would recommend going from the second opinion to the double app?
Like make that transition?
Yeah.
Yeah, I don't want to sound political or anything, but it depends, right? But
that's a good answer. Just kind of a general, what should you look out for?
If you're 10 days in escrow and you don't even have a conditional approval, then you need to be talking to somebody else. I mean, you should have a conditional approval and be working on getting your conditions cleared 10 days into that escrow. So that's kind of the benchmark, I would use as far as the number to take a look at where you're at with things. Which
leads me to the question that I had forgotten earlier. Sorry, guys. At what point should you be worried when an appraisal has not been ordered?
At what point you should be worried if the appraisal, if you're, you know, if you're on a standard contract where it's, 17-day appraisal contingency and it's day 10, 11, 12, then yeah, you need to be really worried about that.
I'm going to make a call after this. Boy, this is good information, real time, real life information here.
That appraisal should be
See
ordered
the
with
color drain from my face.
the first week of the transaction. That appraisal should be ordered and inspected.
Alrighty then. Okay. Okay. Well, I know what I'm doing as soon as this finishes. Any other questions out there? We would love to know. I'll throw it into the things now. Any last questions? Would love to see if we've got some more out there, because you know what? You don't have this opportunity to pick somebody's brain that often. A lot of times we think we're getting the full story because every lender operates different. Everybody's got their, they've got their own thing within their company. And then just like the rest of us, everybody operates differently themselves, which is why you should always have, a minimum of 3 lenders to give your clients, and like usually what I do is say, okay, I'm giving you 3. And this is the one I like for this, and this is the one I like for that, and this is the one I like for that. Find which personality you work with and find who's got not only the best rate, but what's the best terms for you as well. Can you shed any light on anything that you think that somebody should look for in that conversation?
Well, don't just chase the lowest rate that you see advertised. I mean, buyers get themselves into trouble all the time because somebody can quote a rate up front, but if they can't close, that rate doesn't mean anything. So
how do they verify that?
With a lock agreement, with a loan
Okay.
estimate that shows that it's locked. That's how they verify it.
Okay. I mean, it sounds kind of like a basic question, but a lot of times they're like, but the lender told me. The lender told me. Well, like the guy who ghosted us. I mean, he disappeared. After paying for an inspection, he disappeared.
I've never heard of that happening.
You know what? You can never say I've seen it all, because as soon as you do, you're going to see something you've never seen before, especially in the year 2020.
Yes.
Never say never.
Never say never.
Okie doke. Well, we're out of questions on our comments. Believe it or not, Lisa Dunn's out of questions. But Dave, I can't thank you enough for coming on. And I hope put your we'll put your contact information on the Facebook Nerdy Realtors group, and all you guys out there, invite some more friends. We are so close to 500 people in this group, and we've got great information, and we want to be sure that we can get it out there to anybody and everybody that needs to know what's going on in the mortgage world, what's going on in the realtor relief world, because that's still going on with the PUA and the PPP and the EIDL, and all of that's changing. And one of the things that we really want to get in very quickly is somebody who's a specialist on what we need to be keeping our eyes open for, and what documentation, how fast we have to use this money, is it too late to get this money? But we're hunting for that. We're on the hunt for that. So, but anyhow, Dave, thank you so much for being here. I so appreciate it. Any last words to the group?
No, thanks for the time, Lisa. And it's just it's great to be able to serve this community and help out in any way that we can.
And you know what? You are a great resource for all of that. So you guys take down Dave's information. He can save that transaction if it can be saved.
Yes.
All righty, everybody. Take care. Have a good day. We'll see you soon.